go to Tom Piotrowski over at CommSec for a look at today's markets. What shape are we in today, Tom? Good morning.
Well, good morning, Pete. It's a pleasure to speak to you. We've got the markets. I suppose the best way to describe them presently is they're pensive, because in a day's time we're going to see an important measure of US inflation release. It comes on the heels of recent measures that have shown some heat in inflation, be it at a consumer or a producer level. So we had an entree, if you like, in economic news last night with some revisions to how growth performed in the US in the fourth quarter. There was a slight downgrade of the performance of the US economy in the last quarter. Nothing aggressive. It's still going along at a decent clip. And if anything, there was a benefit in terms of creating some downward pressure where interest rates are concerned. Didn't help stocks because as we speak right now, we've got the Dow Jones and the S&P 500 a little bit lower, down by around 0.1%. The NASDAQ down by around 0.4%. That will translate to a loss of around 0.2% as far as the local share market's concerned. Bearing in mind, we had a slightly softer reading on the January measure of inflation yesterday. That provided some relief, but you really need to get those quarterly figures to get the full picture of things. But it did have a meaningful impact on the Aussie dollar, which is back to around 64.9 US cents. So it's lost about half a US cent, Pete, against the greenback on the back of those softer inflation numbers.
Alrighty. Tom, thank you.